Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the week ahead. Today, we're going to talk a little bit about the opportunities ahead of us this week and what is going to be very tricky. I mean, I'm not gonna beat around the bush. I'm not gonna sit here and say this is going to be a great week to trade. This is going to be a tricky one. This is going to be a tricky one, and the reason why is because you've got the 4th of July holiday here in the United States. Independence Day is going to be Friday, and we're going to start to see that liquidity dry up Thursday. Now, here's the thing. NFP is going to drop on Thursday this week. Now, that's a big deal because typically it's the first Friday, but because of Independence Day, they're going to back it up to Thursday. I don't know that I've ever seen that. This is definitely some uncharted territory. So this week is going to be tricky. There's no two ways about it. Right now, I haven't done much in the markets. Personally, I'm looking today. I'm like, we're up a little bit. We're down a little bit. A lot of political talk about the big, beautiful bill. The Senate's deciding if they're going to pass tax cuts or not. And they're sort of holding the American people hostage in a lot of ways because if they don't pass the tax cuts, I'm not sure what happens to our economy. But that's a fact. But the tax cuts are a big deal. And right now, it looks like this bill's going to pass. The question is just when and what's attached to it. And so I've been watching politics, listening to politics all morning. As far as trading goes, I mean, I'm looking at the big board and I'm saying, a lot of green out there. I'm watching the VIX. This would be the chart of the day for me right now is the VIX volatility index. We saw a major really bounce there on that U.S. Open, that 9:30 a.m. Eastern. And what happened essentially was people got a little complacent Friday and then went ahead and said, there's a little bit more risk in this market than we thought. So you opened at about 1708. You're up about 5%, but the VIX is incredibly volatile. Remember, the volatility index, this is the fear gauge. This is Wall Street's fear gauge. As the VIX goes up, what happens? We're a little more skeptical about what's happening in the markets. We think that maybe there's going to be a bit of selling. Now, big picture, though. It's easy to get lost in a 15-minute chart and think that it's overly important. It is not. Monthlies. We look at our macro ranges. Now, this chart right here, what is it? Well, I mean, it's just basically a flat line, but the big events are what really spiked the VIX. That's COVID right there. Right there, I believe that's Russia-Ukraine. August 2024, that would have been the sell-off, the carry trade sell-off. This would have been Russia-Ukraine right in here somewhere. And then right there would have been your tariffs. So if you're interested in drawing trend lines, I know a lot of you love drawing trend lines. For me, I'm not really too caught up with trend lines, but that's an interesting little dynamic right there. You've got a top side right there at 85. That was COVID, the end of the financial world. And then you had 65.73 right there. That carry trade, the yen unwinding, that really scared a lot of big-time investors. And there's a lot of reasons for that. It means, without going on to a 30-minute diatribe, that was a big deal. The yen, in many ways, are used to sort of not subsidize, but invest in the rest of the world and pump our markets globally. And the reason why is because you have a central bank, the BOJ, putting that many yen into circulation. And I'm seeing the United States Federal Reserve sort of follow that lead of the BOJ. So that was a big deal. And then this right here was the tariff craziness of last month. So a lot going on here with the VIX. Today, though, where are we? 1708? Yeah, I mean, we're well below our our long-term average of about 21. So life's pretty good on the stock markets. If you're interested in buying stocks, I kind of hope you did it back in April, bought that dip. Clearly, all the big money bought the dip. No question about it. They bought the dip, and now they're rich. It's all right. We're going to do pretty well. I think that this week, if you were going to pick a week that maybe you go fishing or maybe you go camping or something, this is probably the week. This is probably the week because we're going to see some real crazy price action, especially right around Wednesday and Thursday. And the thing about Thursday, before we get on to everything I've planned for the stream, the thing about Thursday is you're going to have that NFP early, but you're going to remember that the liquidity is going to dry up. There's going to be a lot of folks that are kicking off for the long weekend. And remember, a lot of the liquidity providers, a lot of the big shots, they aren't even in the office this week. I mean, I live out in Dillon, Montana, which is honestly, it's nowhere. It's a map dot. And there are some billionaires that live around here. And I can tell you right now that I've seen more millionaires and investors in this town just kicking around going fishing and stuff. This week, we could see some moves. There's reasons why the markets could move, but it's not necessarily going to be the best trading for us. So I hate to lead the week off like that, but we have to be honest about what we're trying to do here. Traditionally, 4th of July week was absolutely just a killing field. It was terrible for trading. I'm seeing some action here, though. I mean, we're going to be able to make a little bit of money probably tomorrow and Wednesday. I don't know about Thursday. I'm going to have to put my thinking cap on because I'm really scared about that NFP Thursday morning. And with the liquidity drying up, I think we could just get a break and a huge trend day that day for no apparent reason. I'm going to be caution's a great word, guys. Caution's a great word. All right, good to see everybody back in the room. I wanted to get out with that. Yes, sir, good to see you, Greg. Go forth. Good to see you, Greg. Boomer Sooner. All right. David, what time frames do you use for levels and execution? Well, I'll show you. It's easier for me just to show you. I love intraday time frames, but what I will do is I'll take a look at a monthly level. We actually have a daily retracement level that I'm going to look at gold. I'm going to show you this one in gold, and I'll execute that trade on probably a 1 minute or a 30-second chart. But I don't look at the 1 minute and 30-second charts to make my decision. I look for key levels, big time zones that we can attack and get after. So I'll show you that here in just a second, David. But great question. Lita, always a pleasure, Lita. I'm confident everybody's doing well. Dibble, good to see you, Dibble. Always a pleasure, guys. Love the How to Trade community. A lot of the viewers, a lot of the folks there have been with me a long, long time and watched a lot of these live streams. And I'm hoping, I'm confident. I guess I don't hope, but in that respect, I would hope that you gain something out of it. I've been at this a long time, and a lot of you have been watching me for a long time, and you've been at it a long time, and it's time to really start thinking about your goals and what you want to get accomplished. I always have, I won't call it a come to Jesus meeting, but I always have a mental check right about this time of year because we're about halfway through the year. We got to figure out if we're doing well, where we want to be by Christmas and New Year's, and what we have to do to get there. And that's a big part of being a trader is constant psychological checks. I know I'm talking a lot of philosophy here on a Monday, but it really is important. This is a great week really to get your ducks in a row and say, okay, where do I want to be by New Year's Eve? Where do I want to be? And that's how I think. Rolling out of June, basically we're going to get into July, and we're going to get into the second half of the year. Now, the next 6 weeks could be a challenge to trade. Typically, summer times aren't great. But once we get to Labor Day to Thanksgiving, you can make more money in just that period of time, that 10 weeks, that 9 weeks or 10 weeks. That's when we want to trade. So if we're going to do this all summer, that's great. Let's manage our expectations. I don't think anybody's going to be getting rich here in July. I don't see it. But after Labor Day, when we get everybody back into the office, and traditionally that's how these markets work. I mean, as an intraday trader, as a short-term trader, a day trader, the guts of your year really are from about January till the end of May. And then you come back and you go from Labor Day to Thanksgiving here in the United States. So that's September to the end of November. In those months, those are months where we know that it's on. Everybody's trading. The business is there. We can do it. We can do it great. The liquidity is there. The market depth is there. Right now, I'm skeptical about the market depth. I'm watching the market moves today. I'm watching the Dow. I'm watching the S&P 500. I'm not seeing really anything that I like at all. I'm not seeing the participation. Right, here's the US 30. Let's go ahead and take a look at it. We had a trade idea out last week, and I really wanted to stress the importance of the 45,000 level. 45,000 is everything for the Dow. It's everything for the Dow. And you say, Shane, what do you mean? Well, it's a big round number. It's a key level. In quadruple tops, and the charts don't lie. We had a trader that was with us for a long, long time, and he said, you know what, show me the chart and I'll tell you what the news is. And I go, that's great, but sometimes there is no news. Sometimes we have to step back and be traders and say, yeah, 45,000 is a big deal. Why? Because it's 45,000. Because it's a big round number, and there's no denying that. That is the 10,000-pound elephant in the room for the Dow Jones Industrial Average. So if we're trading the US 30, we put out our trade idea last week where we said, okay, we're going to step up and sell. We're going to sell right in front of that. That's going to be a short scalp, and I think it's a high probability short scalp. I would be absolutely shocked if the Dow just blows through this quadruple top without having a little bit of a fight right there on our red line. I would be absolutely shocked. Now, if it does happen, if we break above that 45,000, then we have all sorts of different ways to trade it. Then we're buying pullbacks. We're looking at short time frames. We're trying to get long any way we can, because once this is knocked out, and I know I'm moving fast here, but just think about this for a second. This is basic market dynamics. What is 45? It's a line in the sand. So you've got short sellers that are selling short in front of 45, and where do you think their stop losses are? They're right above that quadruple top. Now, I don't know exactly where they are. Probably the brokers do. I can tell you that they'll probably the brokers themselves will play a great breakout over that. But what I'm saying is this: the stop losses are going to be located in this range. They're going to be right up there between probably 45 and 45.1, maybe 45.250. That's where the stops are going to be. So what we're going to be looking for here is if we do, in fact, break over 45 here in the US 30, we're going to look for volume to spike, number one, and then we're going to look to get on the coattails. We're going to ride their coattails and make a little bit of money. That's the idea. But it has to break first. It has to break. And the way that we see a break is we get a little confirmation. We get a daily close up above 45. We get maybe a 4-hour chart where we blow to like 45.250, and then we're buying pullbacks. That's how we ride their coattails. We call that heat. We get on the steam. We ride the steam play. That's the idea there. It hasn't developed yet, but it will. It's clear to me that we're going to all-time highs. There's no question about it. The spending bill has a lot to do with that. Also, some of the scuttlebutt about rate cuts. Fed rate cuts that we're going to cover here in just a second. So if I'm trading the US 30, that trade idea, boy, I would have that one written down. Now, as far as intraday trading, we talked about the orb a lot. We had a big orb winner on Friday. We talked about a 15-minute orb that just absolutely blew up. Today was harder. Today was a loser. There was a losing orb. Opening range breakout strategy, 15-minute chart. That's the first 15 minutes and the second 15 minutes of the trading day, about 9:30, beginning at 9:30 a.m. Eastern. Boom, boom. Out went the lights today because it just did not work. You had a really a nice orb range. I like that range. I really do. I thought that it was fantastic. Love that. Big move. First 15 minutes, nice bearish move, but a retracement and then a tight second 15. Loved it. That's fantastic market structure. Now, the problem with us is we were selling right down here and we sold near the low. Market rotates back up. It sort of knocked you out probably by a point or two, and now it's rotating right back into the center of the orb range. In my opinion, that's sort of an occupational hazard. If you're playing breakouts, you're going to run into this. You're going to be dealing with these types of losses. Now, the thing of it is, what do we do from here? Well, probably nothing. Like I said, this is going to be a challenging week. Yeah, you're up 184 points on the Dow, but it's just tough. It's like pulling teeth in there. Look at these 15-minute ranges. Now, if you went to a 30-minute chart, which is what I recommend, if you're going to trade the orb, you still lost. You did, but your orb range was a little bit bigger. So, well, actually, you didn't lose. You don't take that trade. So there you go. The 30-minute saved you. The 15-minute chopped you up, and the 30-minute saved you. If you're going to trade this orb in low liquidity times, when the markets aren't exactly healthy, they're not healthy today. I'm sorry, they're not. I would recommend longer time frames. So the question from David, what time frames do I use for levels? I start monthly, weekly, daily. Those are my macro points. I identify key levels like 45,000s, but I'm executing those on like a 1-minute chart. I'm not going to let these trades get away from me. You can't do that. As a retail trader, you just can't do it. You'll get blown out of the box so fast it'll make your head spin. But you also, do you want to make decisions for big money on a 5-minute chart or a 15-minute chart? I don't. So if I'm trading U.S. equities, I'm looking at the 30-minute chart religiously during the U.S. session. 30-minute chart, Forex, 4-hour chart. If you want to trade a 15-minute chart, feel free. I don't really have a problem with that. We just showed you, though. Especially with an opening range breakout, you get chopped up to death there. It really is tough. And the idea behind, attempting to take a lot of trades or get in the – that's all. Really, the only difference between a 15-minute chart and a 30-minute chart is people want to go to the 15-minute chart so they know where to put their stop losses and they know that the trade's a little bit cheaper. The stops are a little bit tighter, and that's fine. That's fantastic. The problem is your entries are also going to be more aggressive. So if I was playing a 15-minute orb, I got no problem doing it after Labor Day, but I'm not doing it on the 4th of July. I can tell you that. Just a thought. All right, let's see. I got a bunch of questions. I'm way behind. Dave, good to see you. Hi, Shane. Hope the weekend was good. Yeah, it was okay. It was okay. Still a little raspy. A lot of allergies this year. I don't know. They started cutting the alfalfa here in Dillon. And it's a big agricultural community, but they started haying, and the guys are out cutting the hay. And I get a little bit of hay fever. My eyes swell up, and my voice gets about 2 octaves deeper. But doing very well. I hope everybody's weekend was fantastic. Stefano. Hey, I just entered a sell on gold right now. Let me know what you think. Well, all right. Let's do it. 30-minute chart. I don't know your rationale for selling. Maybe you just sold right in front of 3,300. It's not a bad idea. I'm not going to eat your lunch for that. It's not bad. But this is a prime example, though. I mean, if you're a key level trader, and we put that video out about a year ago, and not many folks have watched it. And I might make another key level video, because key levels is what it's all about. I mean, that's how the market functions. The process of price discovery in itself, the theory of price discovery is the idea is this: I want to buy, you want to sell. Well, how much do I want to buy and how much do you want to sell? And then price finds that equilibrium. So the idea behind run and rotate is always there. So we're going to run somewhere, we're going to debate price action, and then we're either going to pull off or we're going to go further. Now, it gets deep. It really does get deep. So when you think about pricing something, what exactly are we doing? What's the mechanism? Well, the mechanism is buy and sell orders, and price is just where sort of they even out at equilibrium. So, Stefano's trade here stepped up and sold. A lot of technical traders would say, well, there's no reason to sell there. And I would look at that and I'd say, yeah, but there's 3,300 on the board. Where'd you sell? What's the high? What's the daily high today? 3298.50. So you can't really sit around and wait to sell 3,300s. You've got to get in ahead of that key number, which would have been probably 97.50. And if you did that, you're up a few bucks. So it made some good money. So as far as what do you think that, as far as my opinion on your trade, there's a very good chance you picked the top of the gold market today, if that's where you sold. The reason why I say that is I look over at my big board. I'm about plus 63% on gold. It's not a trend day. Look at these wicks. I mean, this is what we call, that's wiki. Those are dojis. It's very, very tight. It's rotation. It's ugly. It's not a break and a run. This type of thing here, this is a break and a run. This is not. This is very, very tight. Now we're grinding up. Now we're outside of the upper Bollinger Band, so you could, in fact, say that, okay, maybe we're going to break out and have that trend day up. Maybe. But we've got a key number up there, number one. How about time of day? It's about 1:15 Eastern, 1:20 Eastern time. Gold market dries up. It just does. Every afternoon. Not every afternoon. I can't say that. But it typically dries up, and you see a flurry during power hour when folks are trading the U.S. stock market. Towards the tail end of the Wall Street session, you may get a flurry, but the volumes, and I'll show you exactly what I mean. I mean, we got all sorts of evidence if you want to see it. 30-minute chart, what do you got? Okay, pretty good standard volumes. Typically, this is when the volume picks up, about 8 a.m. Eastern, about an hour and a half before the Wall Street open. This is gold futures. This will give you a good idea of how much money's in the gold market today. What did you get? Nice, big, right around the U.S. Open. Pretty good volumes, very standard volumes. Only about 5,000 for a 30-minute chart. That's not very much. 5,079. That's very low volume for the first hour of trade. So if I'm looking at this gold market, I'm going, this is a nightmare. So what's happened to volume since then? It's okay. I mean, right there, last 30 minutes was 461. I mean, it's not good volume. It's not deep. And what I mean by that is there's just not that many traders trading this right now. So when I look at this and how this impacts us is being day traders or short-term traders, is look at the DOM. That's a depth of market. A lot of you don't trade with a DOM. I'm a futures trader, so that's pretty much my Bible. I watch the DOM all day, and I know immediately by looking at the DOM after doing this for 15 years, you look at it, you say, okay, it's dead. Why is it dead? Because it's not moving. Price isn't moving. Now, most of you guys are sitting out there going, okay, we understand the volatility. When price moves, that's volatility. And I go, but it's more than volatility. The volatility is a product of participation. Participation comes from people trading. And when nobody's trading, you've got a real challenge. So you got this right here is a fantastic example. What's the high right there? It's going to be 33.10.9. So same type of thing as we were talking about in the spot market, which is trading about 3,300, somewhere right in there. Sellers stepped up in front of 3,300 and sold. Okay. Well, they also did that in the futures market right around 33.10. Same thing, big round number, not as big as in round as 3,300, but the 10 handle is right there, and that looks to me like it could be your intraday top. Now, the problem that I have with making that call definitively, saying, okay, the top's in, sell gold, is that the volume's not there. Now, if we had steady volume, strong volume, I would say, okay, the top's in. The sellers are committed from right up there, right around 33.10. Take the short and go with it. Now, we can execute that trade, I mean, we could step up right now. I mean, if you want, we could sell at market and just send them. Okay, we just sold. Now, let's say we just took that trade. What are we going to do with it now? A good trade has three parts. You got a great entry, you got a stop loss, and a profit target. Where would my profit target be? I have no idea. I mean, at this point, we would just guess that maybe we revert back down into this range somewhere down in there. Where would my stop loss be? I don't know if you guys remember the trade from I think it was last Friday or Thursday we took on a 5-minute chart where I was just sort of illustrating what bad trade location is. 5-minute chart, we used a swing high, got stopped out, and then the market reversed in our favor. The same type of stuff can happen to us right here. This is not a trend day. Are we going to break out higher? Maybe. Maybe not. Are we going to retrace back down into this range? That's hard because we're going to need a bunch of sellers to do that. Where are the sellers going to come from? Look, we're getting crushed right now. We're down 400. That's not good. 440. That's not good. 560. Now the market's starting to move higher and we're in trouble. So to answer your question, Stefano, yeah, your trade was good. You just got to make sure that you get in and get out. I always say get what you're going to get front and center. Get in there. Know exactly what you want out of the market. If that thing retraced a few dollars in your favor, reach in and take the money and move on to the next one. Because you are fighting a little bit of intraday pressure here. Will it work out? Did you pick a top? Maybe. I don't know. We got to wait and see. 30-minute time frame. Let me see, David. So the 15-minute key level, the 1-minute entry. Well, I mean, David, to use a 15-minute chart with a one-minute entry is something that I did for a long, long time. I sat around and you're looking at my screen right now. That pretty much is what I have on my screen when I trade. You'll notice there's only one chart. When I first started, I was like a lot of you. I was a big fan of multiple time frame analysis, and this right here looked more like this. I had every time frame going possible. That's what it looked like. I had a 1 hour, I had a 60-minute, a 30-minute, a 15-minute, a 5-minute, a 1 minute, and a 30-second, and a 1500 tick chart. All of this stuff I was looking at the same market with, and it didn't get me anywhere. I sat there and I said, okay, well on the 15-minute chart it's bullish, but So I finally said, you know what? We got to make this easy. We got to figure this out. So if I was looking at something like gold, this would be my 30-minute chart. I'd be using that as reference, but I would start with my macro levels, monthly, weekly, daily. All right, let's have a look at the gold market and see if we can build a trade or build some key levels that give us a clue maybe of how to trade tomorrow. All right, 30-minute chart. You see we're moving a little bit higher. I'm still skeptical. I think we could definitely pull off here. No question about it. But let's take a look at the monthly chart. Now, the monthly chart is something that I really was dwelling on for a long time, and we did, in fact, have an opportunity to play a breakout above last month's high. We had a nice little washout, but it didn't last, and we had a lot of selling. But look at what's happening now. We sold right down into this doji area. We're getting ready to roll to July. Do you want to be long or short gold? I would much rather be long. I would feel much better about holding longs than shorts. But how would we trade this going into July? Well, the first thing that I would recommend is outlining your monthly highs and monthly lows. Those are going to be huge levels for us as we roll into the next trading month. But how about this? Your all-time high right there is right around 3,500. So you've got 3,500, you've got an inside month, and then we traded above that to right around 3,450. I'm still bullish. I still think we take out 3,500 or at least go up there and have a smell. Now, I don't necessarily know when it happens. So do you want to buy right now? I can tell you right now what a lot of retail traders are going to do. Now, we're getting ready to roll the calendar over to July. And this is a very, very common strategy. It's time-based. And what people will do, retail traders will do, is they'll buy in and then place their stop loss beneath the previous month's low. So it's not the most sophisticated thing in the world to step up and bid this thing. The problem is where's my stop loss? Well, if you do that, you're going to have to put your stop loss where everybody else has theirs, which is right beneath the previous month's low. That's where the stops will be. Does that make you a great trader or does it make you a fool? I mean, there's an old saying when it comes to poker. When you're sitting at the poker table, it's from that movie Rounders. If within the first 30 minutes, if you can't spot the sucker, you're the sucker. having a stop loss beneath a monthly low or a monthly high is good for institutions because they have a lot of money and they're time-based and they can do a lot of different things with their portfolios. But for you, for a retail trader, you have to understand that putting your stop loss where everybody else is putting it is going to get you into trouble because most of the time those stops get run. That's the way the market is. The market's out to get as many people as it possibly can. That's the nature of price discovery. Think about that for a minute. If the whole world is long here on gold, and the market, I mean, I'm not saying the market has a collective unconscious, but it really is a representation of what we all think. If everybody's holding longs, and some of the big guys, let's say the Goldman Sachs of the world, or the JP Morgans or the Citibank, and they go, okay, everybody's long gold. We know where the stops are. Maybe we step in and we sell, 500 or 600 million and try to dump this thing on an intraday basis, run those stops, and then buy it back at a discount. Because after the stops get run, the market bounces back inevitably. I've seen it happen a million times. So if you're going to buy gold on the last day of June, put your stop loss beneath the previous days or previous month's low. I don't necessarily believe you're wrong, but there's a real good chance you're going to trade beneath that level, and then the market's going to reverse once everybody's stopped out. I've seen that happen more times than I can count. Thousands of times. Happens on intraday time frames all the time, every single day. So be very careful what you're doing with gold. As far as I'm concerned, yeah, I do want to be bullish, but I'm going to wait. I'm going to go ahead and wait. I want to see where July opens. I don't think you're going to get a big leg up on July. There was all sorts of news. There was death threats against Trump. There was a fatwa, which I believe is a holy war or jihad or something was declared out of Iran. I don't know. I just saw the headlines. That was big news today. This right here was big news today. Kashkari 3 days ago, but he was also on the news this morning talking about 2 rate cuts this year and then a pause. That's fascinating stuff to me. That's always going to move the markets. As far as what's happening in equities, S&P rises to another record to wrap up a second quarter comeback. White House says it expects more countries will drop digital services. There's a lot going on here. The big thing that is really weighing on the markets, and always remember this when it comes to politics and markets and money. They do things in the dark of night. I've seen more bills passed in the middle of the night and on weekends than ever. They don't show up Monday. The lawmakers, they don't show up Monday morning and just pass something. They don't go to work like me and you go to work. They don't do that. They show up in the middle of the night after they've been having dinner and drinks and everything else, and they show up and they pass something. So if we were thinking about this bill, the big, beautiful bill, it's one of the biggest spending bills ever crafted. Trump's pushing hard for it. There's tax cuts there. There's lots of spending, things that are going to pump the markets higher. They're going to move the markets higher. They're going to devalue the dollar. There's no question about it. I mean, the dollar's getting smoked again today at dollar index trading about 96, 92. So if you do pass that, you pass that bill, which is just it's an inflation monster, essentially. When do you think you're going to pass it? Don't be shocked if they pass it Friday night on the 4th of July. Trump would love that. He'll sign it on the 4th of July. They love it. I mean, they love the pageantry, and they love the way the optics look. Don't be surprised if that gets passed in the dead of night this coming weekend. And if it does happen, you're going to roll out and you're going to see a major bullish open because the spending, there's so much spending in there that the markets won't have anything to do but go higher. All right, guys, I got a bunch of questions. Let me see. David, I'm currently long on the GU 136.90 on a 5-minute chart. Well, there's nothing wrong with that. How's the trade going? Thanks for your input. Absolutely, Stefano. My pleasure. Let me see. The issue is that there is a – let me see. Stefano, the issue is that it has a resistance area in the 3310 to 3320 area for going long, assuming there is resistance at almost at 30, also at 3300. I tried to get early on it. You're not wrong as far as, what's going on with gold right now. Let's see how our futures trade's doing. I think we're making money. We're down right about even. This is you go down to a 30-minute chart. This is challenging. You really need to see, I mean, if you're a short-term trader right now and you're scalping gold, you really need to see that previous 30-minute level get washed out. You need to see the market trade down. It needs to trade down beneath that zone. Otherwise, you're just sort of going to ride what I call a dead trend. And the dead trends are really tough because what they do is they just grind you up. The market's not really moving very far, but it's also not going back in your direction. I think this could be a very challenging trade to close out with any sort of money, but I wish you all the best. I think it can work. I really do. I think you could have caught the top of this thing. It's possible. Let me see. 3,300 resistance is based on RSI in the previous lower high. Yeah, I mean, your methodology is not wrong. I see 3,300 as being a big round number, not really a function of RSI or any of that. It's just a big round number. So the question is does RSI have 3,300 as being overbought, or does 3,300 have the RSI showing that it's overbought? It's the chicken and the egg thing, guys. That's what technical analysis, people drive themselves crazy. One of the old stories that I remember being told, my uncle, you guys have followed me for a while, but my uncle was my mentor. He got me into the markets. He taught me pretty much everything I know about trading and marketing. Not marketing, but markets in general. I don't know anything about marketing. But one of the things that he said, he had a friend that was a trader, and he traded GAN fans. I don't know if you guys know what a GAN fan is, but he traded a GAN fan, and nobody wanted to use his system. Nobody wanted to trade. He was making decent money on Wall Street, but the idea was to come up with a revolutionary new way to trade, basically reinvent the wheel. And the way that he was doing it was GAN fans. Gentleman finally lost his mind. I'm not going to say his name because he's in the financial literature, but he eventually lost his mind, and that's what technical analysis can do to you. That's why I recommend doing something intuitive. Keep it simple. Don't go down the rabbit hole. Man dedicated his life to GAN fans, and it didn't bear fruit. And unfortunately, in this game, the consequences are dire. People lose their minds doing this. It's a high pressure. Hey, listen, I come across as being pretty even keel on these streams because I've been around a while. But I have my days where you just sit there and you want to throw the computer out the window. The good news is the further along you get in your career, the fewer of those days you have. And then the rest of life, the rest of life always impacts your trading. There's no way to get around that. You're either you either can be solid and compartmentalize things and deal with the pressure and the stress, or you can't. And I'm going to tell you firsthand, I've been through some stress, and it makes you stronger, but you got to be able to weather those storms. And the last thing I'm going to say about this from a psychological level is don't make small mistakes big ones. Don't lose a little bit and then end up losing a lot trying to get back the little bit. We put a tourniquet on it. We make our mistakes as small as we can. Don't make small mistakes big ones. If you can do that, you can trade and win. All right, last level right here, 38% 4-hour chart. You want to be long the Euro USD. You don't want to be short. 38% 4-hour chart right there, right around 117.50. That's going to be a pretty good trade. All right, everybody, I'm going to go ahead and sign off today. I've rambled on long enough, but great Monday session. Absolutely happy. Eli, good to see you. Great Britain Pound Australian dumped, waiting on the Great Britain Pound Japanese Yen. David, I want to start using the 1-minute chart, but I want to see the higher time frame work. Yeah, the 1-minute charts, I don't recommend starting with that. I recommend using a broader perspective. I think that's going to get you where you want to be faster. Let me see. Jonathan Ross. Hey, man, you question. All right. I got one. Harry missed half the stream, but great insight as always. Thank you, Harry. I sure appreciate it. I always love it when you guys join. Dibble, good to see you, Dibble. Always a pleasure, man. I hope you're trading well, and I hope everything's going well. I'm confident everything's going well. I don't hope. That's right. I keep saying hope. Yeah. Hope's for children and losers. We don't hope in this room. We don't hope on this stream. We're confident. Absolutely, Stefano. Jonathan Ross, hey, man, you question. When scalping, it's hard for me to go for 1-to-1 risk versus reward. I always got with 2R because that's what I've been taught. How can I convince myself to stick with 1R as I see many of my trades at 1R? Well, it's just a mindset. And the biggest problem people have, and they get married to the 1-to-2s, 1-to-3s, 1-to-4s, is basically just greed. They want to get a lot of money out of these trades. And listen, I'm the same way. When I'm trading gold futures, sometimes I let them run. I say, yeah, instead of 15 ticks, we need to get 20. The problem with that mentality is if you don't know exactly what you want before you start trading, and that thing goes to 18 ticks and comes back against you and either stops you out at break even or you take a loss, then that's a wrap. Mentally, you're done. The mentality is over. You won't be able to make it. You'll go down a hole and you'll make those small mistakes into big mistakes. So my idea is behind the 1-to-1. And the way that I've always said it is, listen, I want you guys winning trades all the time. I want the money stacking up. How can you do it? Just put down your 1-to-1s. If you don't feel like you're making enough money, leverage up. 3 to 5 to 7%. I'm coming around to 7%. I'll sign off on 5% risk on a trade, and that's a lot. You go above 5%, you're going to run into trouble. Eli, hope's a dangerous thing. Hope can get you into big trouble. Hey, listen, it's important to be happy, and it's important to be content in life. Don't sit around hoping for the big windfall. Don't do it. You'll lose. Be consistent and be strong. Monday psychology session. All right, guys, I'm going to go ahead and sign off for right now. We're going to have a trade idea out. I don't know if it's going to be out later today. I got to write the newsletter up for Switch Markets. Be sure that if you're going to trade, you head on over to Switch. And also, if you're a client over there, you're going to get our pick to click, our pick of the week, which I'm going to film a little bit later today. And then also, we're going to go ahead and write up the newsletter, which will all be disseminated tomorrow. So if you're a client of Switch, be looking for that newsletter in your inbox. We've had a couple pretty good trade ideas in there and some decent insights as well. So be sure to check that out. All right, everybody, I'm going to go ahead and sign off. Fantastic session. I want to thank everybody for joining today. A lot of fun, always as usual, a lot of fun. Tough week this week. Don't lose a ton of money. This isn't the week to do it. All right, everybody.